this right here. Whoops. Okay. This right here is being live broadcast on YouTube. So if you can't see these little tiny numbers, okay, you might want to think about going into the other room, put it on the big screen TV, just sitting on the couch and watching on the big screen TV. I mean, it's easy to see these numbers. Also, while it's also being broadcast, it is also being recorded. So anything I say tonight is being recorded. So if you want to go back and watch it, it's on YouTube. The 10-minute trader, whatever platform you're on, there's 9 platforms we're broadcasting at this moment. There is a bio link somewhere. So and TikTok, I know it's right up here at the top left-hand corner. Just click on that, and it'll take you right to my webpage. What also takes you to is a calendar. Or an email. You can send me an email and say, hey James, I'd like to have a conversation. You send me your phone number. Now when I say that, I say that with the intention of I will personally call you. I'm not going to pawn it off on someone else. I personally will call you. And for a second reason. Second reason is I don't do. What's that? WhatsApp. Not Instagram. WhatsApp. Snapchat. Telegram. Emails. Anything. I don't do any of that. Okay, you're hearing me live. That's all I do now. I just do live. So if you want to have a conversation, fine. Drop me your number. Not here on the screen for everyone to see it. Okay, DM. Okay, direct message or an email. One or the other. I'll get it eventually. Okay, I have like 12 email addresses. So it's very difficult to all of the time. You gotta remember. I've been online when they had 256K modem. A whole bunch. You probably have no idea what the hell that means. 256 dial-up modem. 256. That was hell. Okay, and you have to dial it. Somebody picks up the other phone. You get disconnected, and we get paid by the minute. So when we first started this online adventure, we had to pay by the minute to be online. To make matters worse, to trade online back then, it was $250 per transaction. So you're doing a transaction now. You're buying a stock. You buy 4 or 5 shares. You gotta pay $250 to buy those 4 or 5 shares. Okay. Now it's down to what, pennies? Huge difference. So what was I saying? So if you want to talk to me, send me a number. I'll give you a buzz. Okay. This is all being recorded. So if you have any question, look at it closer. Fine. Awesome. All right. So new quote. Just looked at this. Great. Before I dive deeper into the chart. First chart. Second thing, the numbers. Because it's very important. Not just what the chart is telling. Because the chart is a great time to buy. I can look at it really quick. It's a great time to buy this. Well, great. But is it going to be profitable? Okay, remember, I have two goals in mind. Consistency, profitability, and preservation of my capital. That's my main objectives. All right. It's 138.17. So the closest strike price, if you don't know what a strike price is, you can look up on Google or whatever search engine you use, and look up understanding covered calls, or how to do a covered call, what's involved in a covered call, question mark. That's what I'm doing. Covered calls on good quality dividend stocks. But there's a twist to what I'm doing. Okay, it's not that simple. All right. 138.17. The closest to 138. Look at this. It's 295. Now I'm looking for 1% a week. 1%, if you didn't know, 1% under $138. Remember, I'm looking for 1% profit every single week. Okay, so every single trade I do, just 1%. That's it. Now, probably thinking, why the hell are you doing that? Why just want? Because it's simple. It's predictable. It's consistent. Okay, and that's what I'm looking for. I'm looking for simple, safe, consistent, less than 10 minutes a day. Well, that's the reason why I was called the 10-minute trader. My 9-year-old daughter back in 2008, what are you doing? I would trade for hours. Okay, so she said, what are you doing? Can you teach me? 9-year-old girl back in 2008. Can you teach me? It's like that. I wasn't expecting that. All right, so for her. Simple, safe, predict, consistent. No way for her to lose. That changed our whole life. Because a little girl wanted that reset password. I want to reset my password. It just pops right up. So with that stuff, I'm looking for five rules. Because five rules keep her on track. Never buy something you don't want to hold on to. Never sell a loss. Make sure the company's profitable. Weekly options only. Make sure the numbers work. That's it. It's not that difficult. It was created for a 9-year-old. And here's the kicker. It was created for her to do in less than 10 minutes a day. How are you going to keep the attention of a 9-year-old? You got to make it short and sweet. Simple. Why am I looking at this? That's what the calendar's for. The calendar tells me I'm looking at 6 stocks. That's all I look at. I look at the 6 stocks. I pick 1 or 2. That's it. I don't buy a whole bunch. I buy one or two on Monday. I get my 1 or 2 or 3%. I'm out by Friday, preferably. If not, I'll roll into next week. Now, most of my accounts, I have 7. I share 3 of them publicly, so you can see exactly what I'm doing. Different accounts. Okay. Each one has between 6 and 8 stocks. That's it. I don't have a huge portfolio. Because all the stocks aren't doing the exact same thing every week. Like this one right here. Yeah, I do this one because it looks good. Now, don't get me wrong. I like the company, but it's not the right time to buy it. It might be the right time the next week after, because you saw the chart. It looked good. It's dropping at the moment. Finds back up. That's all they do. Go up and they go down. That's it. Don't do anything else. Don't come to the house, walk the dog. They don't wash the dishes. They don't come over, make the bed. Put little candies on the pillow. They don't do. They go down. That's all. All right. So check the numbers. 1% $138. 138. What's 1%? 138. 138. $138. 1% is $1.38. It's actually that simple. 138. All right. I'm looking for $1.38. Well, the 138. I'm going to put $2.95. Now you don't have to be a brain scientist or brain surgeon to know that 2.95 is higher than 138. So that's more than 1%. Fine. Now what is the chart? Okay. 1 year chart. Great. The numbers great. Now I want to deeper dive into the chart. Is the chart telling me it's the right time? For that. I need my glasses. Because I got a 60-inch TV right there, monitor. 60 inch. I'm 5 feet away from it, and I still need my glasses. Getting old is not as much fun as they make it sound out to be. Because when I was younger, I didn't need the glasses. I could see fine. No. Mother Nature's a bitch. Anyway, a year ago. We're at 148.45. The high of the year was last year 11.6. That's the first week of November. The bottom of the year is right there. TDS. Okay, TDS right there. The second week of April. From there, shoots up nicely right to there. Now that zoom into the last 90 days. Now normally I look at the 1 year, the 90 day, and the 30 day. Once in a while, I'll take a seasonality chart. So this is the 90 day. Okay. High, low, as it were. Look at this. Up, down, up. That's plain to see right there. This is where we are right now. It's going up now. So let's zoom into 30 days. Because a 30 day gives us a better idea of what's happening now. Okay. 30 day high. Right here. 30-day low, right there. Look at what we're doing. 30-day high, drops here. Now she's coming up. Very slowly, by the way. There's nothing wrong with slow. I like slow. Especially the trades that I do. I would prefer the stock to go sideways or slightly up. I don't want a big jump. Okay, big jump means I got to pick another stock because it's going to get to a certain point where you can't make any more profits doing covered calls. Because once you start a covered call, you're basically in that position until it's done giving you money. When it's done giving you money, move on to the next one. Okay. So here we are right now. Let's get rid of this. I'm going to show you how to actually do one. Okay, so we're going to do this one at 138. Change it to covered stock. And the 138 is right there. I'm just going to do one contract. That way you can understand what it looks like, what it sounds like, and then you can compute in your own head. Okay, if one contract is 13,000, five contracts is going to be 60,000, 65,000. What's the rate of return? Well, let's find out. First of all, let's go over the trade. Here it is right here. Buy one, covered call, and you need 100. It's the weekly option on you. And you buy one covered call. 17 October 25. That's next Friday. So whoever buys this option, they have between tomorrow morning do this trade until Friday afternoon, next Friday at 3:59 p.m. before the option expires, and they're basically stuck. All right. The 138. That's what I want. 138. Okay, it's currently at 138.17. But I want to sell it at 138. Now, does that make sense? To buy the 138.17 and sell it at 138? Think about it. Does the stock have to go up? No. Does the stock have to go sideways? No. Can it go down a little bit? Yeah, it can. So it only goes three ways. Up, down, and nowhere. So if I'm winning, if it goes up, I'm winning if it stays the same. I'm winning if it goes down a little bit, as long as she's above 138 by next Friday. Well, it's in an upward trend. And I'm selling it for less than I paid for it. Well, here's the kicker. Remember I said simple, safe, predictable. Remember that part? Simple, safe, consistent. Well, predictable. I know exactly what I'm making before I even do it. Okay, the maximum profit on this trade, $290.50. Now it doesn't sound like a lot. What's the rate of return? That's what I'm looking for. I'm looking for the rate of return. Now, if I buy this at 138.17, I will never ever sell it for less than I paid for. My goal here is 138. That's my goal. That's my target. 138. Sounds like it's low, but it's kind of not. Because I'm walking away with profit right here. And I can do the 138 every single week. El Portilla, que más amigos? He wants to. Sorry, dude, I don't know you. So, sorry. That being said. We're at. Okay. Let's do some math. Here's my maximum profit, 290.50. Here's the cost trade, including commissions and fees, 13.5. So let's do some math. Calculator. Clear that. Profits $290 to get your rate of return. You take the profit, 290. You divide it by the investment you paid for it. 13.5. 5. There we go. Okay, so this trade here is 2.14% for 1 week. Do you understand what that means? If 1% a week is 50% for the year, 2% a week is 100% per year. Now I'm terribly sorry you have to spend 10 to 15 minutes a day to make 50% return on your money. When you're first starting out, it doesn't seem like it's worth it. But when you get older, in your 50s, in your 60s, and you're retired, and you have your lifetime of earnings in front of you, you have two choices and only two. So don't think you're special. Okay. Tick tock. Ain't no way you're gonna stop the clock. It just you ain't gonna do it. Retirement is coming whether you like it or not. You're going to be 60, 65, 70, whether you like it or not. It's coming. Okay? You got two choices. Okay. Learn to do it yourself. Take responsibility of your own money, or pass it off to someone else and let them do it for you. But I can pretty much almost guarantee whoever you give it to is not going to care as much about your money as you do. Okay. And if you have that amount of money, well, great. Good for you. Okay. I actually do a lot of trading for other people. They have money and they don't really need me. But they make so much. It's like great, wonderful. They don't want to do it. Fine. I'll do it for them. Not a problem. Okay. But I can't do that. I don't have that luxury. Okay. I trade on people's money for them. But I can't do it myself. Okay. Well, my money. I'm making just on my own. Anyway. So 2.14%. Think about it. 2.14% every single week. 5 or 10 minutes a day. 5 or 10 minutes a day comes to. Well, it's going to take you more than that when you first get started. Once you understand what you're doing, it's kind of like driving a car. Okay, when you first behind the wheel, it's not that easy. Okay. And then when you get stick shift, manual, it ain't that easy either. So that being 2.1% is over 100% for the year. Doubling your money a year for 5 to 10 minutes a day. No. Someone's got a question over here. Question. Lisa. Hey James. What happens when the rollover amount is zero? Example. Harley Davidson 2850 strike. Okay, hold on. Pull up Harley Davidson. Get rid of that. Get rid of this. Let's get rid of this. Oops. No. Go back to there. Let's go back to here. And let's pull up Harley Davidson. Pull up Harley Davidson. Oh, all right. Let me go back. Look at your whole picture. The big picture. Okay. So big picture. Harley Davidson. Hold on a second, Lisa. Here we go. All right. High of the year. Low of the year. Where was it a year ago? Where is it now? What's the motion? Up, down, up, sideways, down. Okay, so it's in a downward turn at the moment. Now, Lisa, you doing that Harley Davidson is an American icon. I really don't think it's going. It's been in business for over 100 years. All right, so let me see what we got here. When the rollover amount is zero, example, 2850 calls, 10 expiration. Is it best to roll early in the week or on the last day before expiration? Okay. Well, 10 is tomorrow. Okay. That is going to be zero. Okay. Because you got one day to expiration. Okay, when you're rolling over, you're not looking at 10, you're looking at 10-17, which is next week. Okay, so let's open this up here. She said 2850. All right, here's the 2850 right here. All right, so the 2850 for 10. That's tomorrow. It expires tomorrow. So the 2850 is going for zero. It's only one day left. There's no time value left in it. But when you're rolling over, you're buying it back 2850, and then next week, there's nothing there either. Yeah, I see that. Okay, well it's at 2650. Let's zoom in a little bit closer. Okay, last 30 days. Here's your last 30 days. Okay, 29 to 31 to 2650. Okay, 2850 is here. Okay, that's zero. The 28 over zero also. Okay. Now the 2750, that might be a little too close. Okay, so here's the thing. All right, let's not do that one. Let's not do that one. Let's go out an extra week. Okay, go out an extra week. 2 weeks. 2850 here is 30 cents. That's more than 1%. Unfortunately, 2 weeks. So once you buy, and the stock drops, and this does happen. Don't kid yourself that it doesn't. Okay, 30-day high is 3150. Right there, and then she drops the 30-day bottom. How much lower is it going to go? So you have a couple of choices, Lisa. One, you could dollar cost average. Buy it here, 2650, 2850. Then you end up at 2750. Okay, if you buy it, I don't know how many shares you have. I can't really say. So if you have 100 shares, you can, if you can afford it, buy another 100 shares at 2650. And that will bring your dollar cost average to 2750. That way, the 2750 for next week is going for 60 cents a share. That's 2%. Well, that's nice. But if you don't have that ability, you can always go out further. There. To the 31st. Now the 31st, it's not 28, it's 28. And now it's 90 cents. share. So the further you go out, 7 November, 14 November, 21 November, the further you go out, the larger this number is going to get. So you have to decide, and it's going to be a personal decision. Okay, you know what you bought it for, number one. Okay, you know what you sold. So if you bought it at 28.50 last week, you sold last week 28.50. Well, this week it's expiring worthless. Fine, because the stock dropped. Well, the stock is going to get to a certain point. She's going to turn back up again. So you don't want to sell a strike price too low, but you don't want to sell it too high either, because you want to have some money coming in, but you don't want to be too close to the action. The action is right here. Okay, 28, there's no action, no money there, unless you go out further. You know, this is this week, tomorrow. This is next Friday. This is two Fridays. This is three Fridays away. So is it worth it to sell a 28 or 29, pick up this amount right here for 3 weeks from today? Well, then you have to take a look. What's going to happen in 2-3 weeks? Where's the bottom? We don't know where the bottom is. And if we did, we probably wouldn't be somewhere else. Think about it. Okay, if you knew where it was going to be, it's the only thing we can do is guess. Now, Lisa, let's take a look at this for a second. Let's take a look at seasonality to see where this normally goes. Now, for those you don't know anything about seasonality, you probably don't know. But you do. Isn't that weird? You probably don't, but you actually do know. Let me explain. Hold on. Talking 2 or 3 hours a day. Consistently 2 hours, 3 hours a day. Not good for your voice. This here is what's called a seasonality chart. It gives you a good idea of what the stock normally does over time. So the blue line, all the way to the left, that way. That's January 1st. Way over here. Over here is December 31st. That's one whole year that we're looking at. The blue line represents the movement this year. The red line represents the movement on average over the last 10 years. I have mine set for 10 years. You set it for 3, you set it for 5, you set it for 10, you set it for 20. Well, I think 20 is too much. I think 5 is not enough, so I set it for 10 years. So this is what the stock normally does. Take a quick look. See where we are right here? See where we are right there? So what happens here? Bump up here. Then she's going to pull back, and then run up going into December. Okay? So if you panic and sell now, you're going to miss this right here. That's called seasonality. What does the stock normally do this time of year? Well, nobody's really buying in January. A little bit up, down. Look at it in February. Jumps up, and after it drops like a rock. Then it goes up, sideways, dips a little bit right here, which is where we are. Okay, which is right where we are, right here. A little bump up here, which looks like next week. Let's zoom into it, get a better view. Okay, we're right here, just today. Right to the high. Okay. So this is where we are today, right here. 10.9. Here's 10.9 there. Here's your flat line. Gonna go up a little bit, down a little bit. Look at that nice run up. All the way until the end of November. November 24th, December 1st. Okay, that's the last week of November. Okay, now that's not guaranteed. That's just what has it done over the last 10 years, predictably. Okay, so pull back a little bit. Where are we? Okay. Okay, this is where we are. Close it up. It's a little too much. A little too much. A little weird. Okay. This is where we are now. 30-day high, 30-day bottom. What it normally does is it shoots nicely over the next 4 to 5 weeks. Wait a minute. October. Yeah, 4 to 5 weeks. So if you bail now, out on this right here, that little runner. So that's possibility. It depends on what you do, Lisa. Okay. You could basically do anything you want. If you wanted to do next week. Next week's not going to pay you squat. Okay, the only thing you have for next week is the 27.50. It's paying 30 cents a share. Well, that's nice. Tomorrow's Friday. Why you? I'm not telling you I can't do that. But if it was me, I'd let it expire and just wait until Monday to see what opens up on Monday. Because we don't know if this is the bottom. Because it could be the bottom. No guarantee. Okay, tomorrow could be the bottom. Monday could be the bottom. We just don't know. So we look every single day, and you're probably going to be here tomorrow morning. Every single day we'll see what does it open up at. Because if you sold the 27, 28, 50 last week, this week it's going to expire worthless. Next week sell something else. Well, might want to wait until Monday. Monday morning we'll take a look at it and say, hey, let's do this. Because Monday morning, everything's going to change. Tomorrow morning, everything's going to change. All these numbers are going to change tomorrow morning. So just gotta wait and see. Me personally, I would never sell. I actually own some Harley Davidson, so I'm in the same boat that you're in. Okay, I got 7 accounts. I do have Harley Davidson in one of them. Or two. I don't know. I don't pay attention too much. That's weird. Pay attention to that. All right, I don't need this. Okay. That work for you, Lisa? All right. So that's Harley Davidson. Let's go on to the next one. Now don't get me wrong. Check it out. Harley Davidson. 30-day high, bottom. Okay, now we thought we were going to jump up. Okay, 1, 2. Pull back today. Just wait for a new bottom. I'm going to put Harley Davidson down for next week. All right. Let's take some questions. What do we have? Cincinnati wants to take a look at Ford. Okay, Cincinnati, Ford. Let's take a look. Not this week, dude. Check that out. Okay. Here's the high of the year. That was last week. Now she dropped like a rock. Great. I'm going to put it down for next week. The reason I'm going to put it down for next week. Look at this. Bottom here. It's coming. When is it going to be? It could be here tomorrow. Monday, Tuesday, Wednesday. But I tell you one thing. I'm going to see it when it gets here. And then I'll take a look at these to see if it's a good deal. At this moment. No. Next. Ford for next week. All right, what else we have? Gil, how are you doing today, Mr. Gil? Isa, how are you doing? Greg McDonald, classes in session. Thank you there, Mr. Greg. Thank you there, Mr. Greg. Greg sent me a pot latte. Okay. I don't drink coffee, but all right. Isn't that weird? I'm 62 years old. I'm going to be 62 years old. I don't drink alcohol. I don't drink coffee. I did drink alcohol. I actually had a beer yesterday. One. Who's my first beer in 3 weeks? No, I'm not a big drinker. Okay, don't drink. Don't smoke. I don't have very many bad habits. What are you thinking about Kohl's? Let's take a look at Kohl's. Kohl's was one of my favorite stocks last year. Not this week. Well, I mean, I actually own some Kohl's. I actually have some. So Alex, take a look at this. Here's our high a couple weeks ago. Like a rock here. Jumped up. Now she's 40s. 1, 2, 3, 4. So I'm going to wait for Kohl's to find a new bottom before I jump into more positions. Because I already have Kohl's. Because I think Kohl's is the one I had the most. 14 months I've held on to Kohl's. Because every single week it gave me 1, 2, 3%. The whole year last year. So you can go back and take a look at trades I made last year. Almost every single week I had Kohl's. I had it for 14 months. That's the longest I've ever held anything. Okay, Alex, you got that? No, go to Kohl's for this week. You bought 1675, you sold 1650s. Okay. 1675 right? You sold the 1650s. Great. That's great. Expire worthless. So what are you going to do next week? Well, next week, 1650s, they're going for 23. That's more than 1%. I don't see the issue. Okay. So me personally, I'd let the 1650 expire, and I'd sell next week 1650, pick up another 1%, and then just play the waiting game. Hold on a second. It's like I'm drinking my cocktail. It's actually Celsius. I have to water it down. It's too damn sweet. It's like here. Hold my drink. Let me give you $300 to hold it. For 1 week. Same thing. Here's my stuff. Hold on to it for a week. Let me pay you for it. So the market maker is saying, hold it one more week. Alex, I will give you 23 cents a share. However many shares you have. You have 100 shares, 20,000 shares, 200, 10,000 shares, 2,300. It's always the same. It's all right. Yep. Go ahead. Make the old man jokes. User 968. Nice top. I have no idea what that means. Nice top. Path. Speed. 3,000 hertz. Path. What is path? PATH. UE Path Inc. I forgot to tell you. Do not show me something at the high of the year. Hell no. Okay, speed 3,000. Nico! Hey James, how's it going? It's wonderful. Thanks, Nico. New Jersey, what's going on? Foo. Can you take a look at Texas Instruments? I think I like the dividend growth. Okay, hold on. TXN, I actually have some. Interesting. Okay, let's take a gander. All right, I don't need these. I don't need that. All right, there we go. I don't need 10 of them. I only need about 8. 8 works. All right. October 14. How are you doing today? Uh-oh. What's happening? Oh, yeah. Prove them. There we go. Right. There. All right. That being said, Texas Instruments always. You guys might get bored of this, but I do the exact same thing over and over. It's boring. It's monotonous. It's pitiful. Okay. High, low. Was it? Is it down? Okay, going down at the moment. It's that quick. It doesn't look like a good deal this week. No. Okay, you 30 days. Here's your top. Here's your bottom. Up again. Now she's dropping. As she's dropping, she'll find another bottom just like this. Okay, as soon as she finds that new bottom, wherever it is, we don't know where it's going to be. That's why we look every day. Seriously, I look every day. My own personal account, 10 to 15 minutes. I do know when I sit in front of the computer. I don't. Okay, if I have six positions, great. Six positions are. Okay, number one. What did I buy it for? What did I sell against it? What did I collect? Where is it at now? Where's it going? What should I do? It takes me less than 30 seconds to find that information out. Let me show you. Just so you understand. Okay, account here. All right. Coles. Right there. I got Coles. All right. Just like we were talking about. Coal. Right here. Here's the high, the low. Was it? Down. Look at that right there. I'm not counting that right there. That's an anomaly. It doesn't happen all the time. It's probably someone that probably some hedge fund dude who probably got that just like 2 or 3 seconds shot up. But I like realistic. Here we are right here. Now I already have Coles. So let me show you how quick this is. You ready? First thing I want to put it in the chart. Now watch how quick this is. I put my cursor on top of Coles. Right click. View. Wait a minute. Let's do this first. Last 2 or 3 weeks. Okay, last 30 days. Right there. Okay, that's the last 30 days. Okay. High. Was it? Down. Okay. Here we are right here looking for a new bottom. Okay, so that's 30 days. I see where it is. So let's see how quick it is. See the chart right here. View trade. Okay. What did I buy it for? 16.35. What's it at now? 15.27. It's dropping. What did I sell? 17 October, which is next week. The $16 call. This is what I collected. This is where it's at now. What do I do next? Nothing. Because I already rolled it in next week. Okay, so I saw the numbers. The numbers gave me a nice number. Great. So I rolled it into next. Now it says 17. I bought it all the way back beginning of the month. 10-2. That was last week. So it doesn't take long. What did I buy it for? What did I sell against it? Where's it at now? Where does it look like it's going? What should I do? Nothing. For me, that one position. Every position is different. Okay, so I take a look. I buy it. What did I sell? Is it at now? Is it going? What do I do? I already rolled full a couple of days ago. From this week into next week. So what do I do now? Nothing. I just sit and wait. It takes me less than 30 seconds to see that. Okay, right click, view trade. What's the chart telling me? Great. Nothing to do. Anyway, next question. What are we doing next? Path was a no. Nico, how you doing? Take a look at that one. MNC. Tokenized RW, good investment. I have no idea what that means. RWA. What is RWA? RWA. Robert Walters. No. Sorry. Looking forward to Pepsi. I'm holding a call overnight. Now, Mama wanted to take a look at Pepsi and FCX. So you're up, Mama. Let's go. FCX. Now I have some FCX in one of my accounts. Interesting. Holy cow. Not the time to buy, but definitely the time to sell. For me anyway. High, low, was it? Is it? Down, up, down. Okay. That's what it looks like. Now it's not the time to buy, and here's the reason. Let's zoom into the last 30 days. All right. Here's the last 30 days. High, low. Is where we are now. Okay, it was at 35. Now it's at 45. Now you may think that's good. Let me enlighten you a little bit so you can look at it from a different perspective. All right. Now, this was the old trading right here in 44 and 46. All right, fine. Big drop here. Why did it drop? At this moment, I don't care. Because it already happened a couple of weeks ago. So it doesn't affect us at this moment. Now the gap here looks like it's going to fill right there. Right, it's already filled. So the run up from here, $35 to $45 is $10. Now $10 doesn't sound like a lot, but here's the thing. $10 on $35 stock is over 25%. 25% increase. Yeah. There's going to be profit. And guess what? It can show up tomorrow. It can show up Monday. I'm not jumping into this. I already own it, but it's not the point. I'm not going to jump into a new position. Because it just doesn't make sense. Now, two weeks ago, right here, bottom, 1 day, 2 day, 3 day. This is where I would have jumped in. Okay, bottom, 1 day, 2 day, 3 day. Okay, I have rules for myself. That's for me. Any video you see me, I got 1,200 videos available on YouTube. Take a look at all of them. It's always the exact same. I want a 30-day bottom after a 30-day top. 2 days to the upside, 1, 2. On the third day, that's where I will jump in if it goes up. Not once ever in my trade 30 years trading. Not once have I ever picked the bottom, and not once have I ever got a top. That's not what I'm looking for. I'm looking for this. Okay, not here. I'm looking for this right here. Between here and there. And once you get here at 38, 1% of 38 is 38 cents. All I'm looking is for 38 cents. So right here. So I'm usually out right here. I'm not looking for this. I'm looking for consistency, predictability, safety. That's what I'm looking for. You guys want to go this high. Yeah, be my guest. Do what you want. I'm just showing you what I do. Okay, I am too old to start over again. That means I don't have the luxury of being wrong. For you guys in your 20s, 30s, 40s, 50s, hey, you can screw up, but you're still working. You can still put in some overtime. You can still work some extra days. I've been working since 1973. I retired 2 years ago. That's 50 years. 50. Some of you guys aren't 50 years old yet. Next. All right. That's FCX. How'd that work out for you, Mama? We're gonna have P. Pepsi. Ooh. Interesting. Okay. High, low. Where is it? Down, up. All right. Well, let's take a closer look. All right. Before I do. 44.71, 145, 203. Hell yeah. 203 is more than 1% of 145. It's almost 1.5%. Okay, well, let's take a look. Glasses. And don't even mention bifocals for my dead body. When I'm cold and dead, I'll do bifocals. 170 a year ago. High of the year was the end of October, and that's 177. Now we bottomed out in July. End of June, 127. Now from there, same thing. High, low. Was it? Up, down. What's going on here? Not really a good time to jump in. Only because look at this last 30 days. 30 days. Right. Yeah. Here we go. Last 30 days. Yeah. That thing's moving sideways. I don't call it sideways. Channeling. Okay. Up, down. Okay. This is definitely gonna have taken tomorrow. Okay, Mama, I have no idea why you want me to look at that. That's a high of the 30-day period. I don't ever buy at the high of the 30-day period. Because we buy and sell one day at a time. Okay? Yesterday we're down here. 139. Today we're at 1.5. It's a $5 increase over one day. Yeah, hell no. I don't want to jump into that. That's me. Okay. That's not a clear. Hey, it's time to buy today. That's not it at all. So no to both of those. Sorry, Mama. All right, we're right here. Nico, hi James. I did a covered call this for Friday, but it sold this morning on its own. All right, that's cool. Fufu, can you explain what you immediately saw on the NU chart that told you it was a good buy? Okay. And you all right, here we go. You see the same time I do. Click it. Tell me what's what. Here we go. Oh hell yeah! Right there. That's it. Okay. See, it doesn't take long. Think about it. It doesn't take long. Okay. High, low is up, down. What's going on right there? 3 to 4 seconds. That's all it was. I so quick. I didn't see who it was. So I couldn't think that. But thank you. Okay, does that make sense? Okay, this is the chart. It's the 1 year chart. Okay, 1 year ago. Today. 1 year ago. Today. The high, right there. The low, right there. Where was it? Right there. Where is it? Right here. She came down. She came down. Now she's going up again. Let me zoom into that closer. You can see it also. Okay. 30-day high, 30-day bottom. Now she's going up. That's what I saw. And you should have been able to see the same thing. Okay. Take a look. Take a look. Right there. Three to four seconds also just to see the chart. Once you see the chart, you say, yeah, that looks okay. And when I say okay, there's a huge difference between hell no, okay. All right, so okay. Here we are, 138, yep. Okay. 138, 295. That's more than 1%. So yeah, that's what I saw. Nico. When I buy a stock, then sell a covered call, do I have to buy it again? All right. Hold on a second. All right, Nico. If I buy this right here, 138.17 tomorrow morning. Okay. I will own the stock. That's just the stock itself. I own the stock. When I do a covered call, I'm doing two orders at once. Okay, do you understand that? Two orders at once. Buying the stock is just one order. That's it. Buying the stock. That's it. They covered. It's two orders in one. I'm buying the stock, and I am selling an option for someone to buy it from me for the exact same price I just paid for it. That's two orders. Okay. Order number one. Buying stock. I own 138. Selling the option. I'm selling somebody the right to buy it from me at 138. What does that mean? Well, it's right here at the moment, 138.17. There's not a lot of profit there. If this thing jumps up to 144, whoever bought that option is going to take it at 138 because that's what they paid for. If the stock drops from 138 to 132, they're not going to buy it. I still own it. All an option is giving somebody the right to buy it, not the obligation. They don't have to buy it if they don't want to. If the stock goes up, they don't have to buy it. They can if they want to, but they don't have to. If the stock drops, they're not going to want to buy it anyway. So what am I looking for? I'm only looking for this right here, the option premium. Now, my number one rule is never buy something you don't want too long term. So if I don't like the stock, I'm not going to buy it in the first place. Now, if I buy it, it drops, I don't care because I want to buy it anyway. Never ever buy something unless you want to own it. Regardless if it goes up, down. If it drops like a rock, I don't care. I want to own it. That's why. Because once you own 100 shares, 100 shares equal one contract. 200 shares, two contracts. Okay, if I do it at 138, I can get this right here. Now, if it drops to 132, well, I can sell the 136s, which are right here, and the 136s are whatever they are. Okay, when you own a cash producing asset, that's what I'm doing. I'm creating weekly cash producing assets. So every single week I will get some kind of rate of return. Some weeks are better than others. Okay, some weeks is good. The stock is going to go up. The stock is going to go down. That's what they do. They go up. They go down. That's it. That's all. It's almost 10 o'clock. Okay, hope that answers the question. All right, let the sun shine. Dovey and Jackson, how are you doing today? K. Smithy, Neocorp, NB, what the hell's NB? Nabisco, NB, Neocorp, hell no. Were you not listening? Okay, K. M. Smitty, okay. Don't show me something at the high. There's nothing we can do about it. Nothing at all. There's no opportunity to make money when the money's already been made. Okay, don't show me something at the high of the year. Doesn't work for me. Don't show me. Yeah, I like stuff that drops like a rock. It gives me an opportunity to make a setup to jump in the next time. And definitely. Do not show me something that has monthly options. If it doesn't say October 10, October 17, October 24, October 31, don't show it to me. You should never ever buy something you do not know, you don't understand. So if you know what NB or corporation is, you should know that it only has monthly options. You should also know it's at the current high of the year. Then put two and two together. Don't show it to me. There's no opportunity there. What am I going to do? Look at it and say, good for you. All right. Good for you. Cadvo. Denial is the first sign of a problem. J Brand. Just gambling? You have your opinion. I have mine. Thank you. Della 314. How are you today? Romeo. When is Cole repeat of Coles? I have no idea. Does anybody know what that means? When is Coles repeat of Coles? Does anybody understand that? I have no idea what it means. E.L. Valentin. E.S. What is ES? S.O. Hell no. Didn't I just say don't do that? Why am I looking at these? I don't do that. They're not worth it. They just don't pay the same. Why am I looking at the high of the year? What kind of opportunity is that? If you want to say, good for you, you picked one. I don't want to see it. I don't. It does me no good whatsoever. Please look at Neil. I've been since November last year. Continue to hold. Okay, I can't tell you what to do, dude. Okay, we look at NB. Okay. Here's my opinion of NB. I don't do monthly. They just don't pay. That's my opinion. That's one. Second opinion. You've been in since November. November was at $1. Now it's at $9.81. That's a 10x return. Listen closely. It's not a profit until you take it. Nobody ever went broke taking profits. You do what you want. I can't tell you what to do, but I'm not going to. Because I would have bought that thing in the first place. Number one, I don't buy things down in the dollar area. Because there's no possible way in God's earth a stock that's worth $1 has 20 years of increased profits. At a buck, how the hell are you going to do that? Anyway, let's keep on moving. Look at Alibaba. Thoughts on FNMA. What is that? Fannie Mae. FNMA. You mean the one that almost broke a few years ago? Has no options? Nope. Alibaba only has 2 years dividends. Why are we looking at it? The high of the year is here. Now it's dropping like a rock. Okay. I don't do Alibaba because it doesn't have what I'm looking for. Consistency of profitability. It has 2 years of dividends. Well, talk to me in 18 years. When it has 20 years of profits. All right, maybe 10. Okay, Alibaba gets to 10 years. Maybe I'll look at it. But you get the high last week. Monday. Now she's dropped from 190 to 170. You just lost some $20 No. Keep on. Already did Pepsi. We did buy puts. You buy puts. I don't do puts. Jen from Oregon. That's the year I was born. I'm 52. Woohoo! Thought you were 35. I'm going to take that as a compliment. When should I transition from funded to live account? What does that mean? From funded to live accounts. You're going to need to explain that a little bit better because that doesn't make any sense. Gene Pie, what's going on? We already did that one. Alex, thanks for your guidance. Cole, you're welcome. Hey, Ty Jr., how you doing? Thank you, Ty. NQ Solomon. Why am I going to regret this? NQ. There's no options. Sorry. Cardac. APLD. Oh my freaking God. Okay, nope. APLD. That's at the high of the year. What the hell are we going to do with it? Seriously. Where's the opportunity to buy something that's at the high of the year? It went from $2 to $29. That's a huge. No. Alan, how you doing? Missed the buy could we? It makes no sense at all, Alan. APLD will continue growing. Don't care. Only $2 billion market cap. Don't care. Okay. If this thing was $2 in April. Okay. You know what? I'm going to give you the benefit of the doubt. All right. Let's give you the benefit of the doubt. Let's go to Yahoo Finance. Put an APLD. APLD. I'm glad today's my Friday. I'm not going to here tomorrow. I got 2 days off so I can cool down. 2 days. APLD. APL. There are no dividends at this period in time. So what you mean to tell me is just because you like this, you want of corporate profits or a corporate annual report. You want me to look at 20 years of annual reports to see if this company is profitable. It was at $2 6 months ago. And you think that this thing has 20 years of profits? I'm going to ignore you. I am. Target. I love Target. Target is a dividend. Target has 50 years, 5 decades of consistent profitability. Okay? 50. TATGT. There you go. And look at that. Doesn't that look wonderful? You got the high here, you got the low here. Here's where it is. Down, up. Now she's going back up again. That's what I want to see. Okay, well, let's zoom in a little bit closer. Last 30 days. Here's your 30-day high. Here's your 30-day bottom. Now she's going back up again. The 89, 185. That's over 2%. Here's the thing. The company's over 100 years old. It's got 5 decades of increased profit. It's in an upward trend. Okay. If I buy it and I sell it, I'm making 2%. Now you may be looking for something that jumps up. Fine. Wonderful. Okay. That's what you're looking for. What I'm looking for is consistency of profitability. Okay. The company you showed me doesn't have it. Or if it does, I have to do extra work. No, thank you. There's 10,570 companies. Why should I waste my time on something that they don't share their profits? I'm looking for cash flow. I'm not looking for capital appreciation. So Mark, if you're looking for capital appreciation, you are in the wrong place. That's not what I'm looking for. JMF or JFM. Very cool. Okay, so great. Target. That's what it looks like. Let's do one on target. 89. There it is. Getting old socks. It does. 89. Right there. There it goes. And here it is. Buy one target 17 October 25 at the market open. Here's the profit. Here's the investment. 87. So let's find out. Is it a good investment? Well, Target's been around for 100 years. Number one. Target has 5 decades of consistent profitability that I can easily see. I can click a couple buttons and say, they've been profitable all these years. It's easy. I'm a lazy trader. You want me to do extra work for something that might happen. No. I want consistency of profitability. I want safety. I want predictability. Let's go. All right, 179. That is the maximum profit. 179. Cost of trading, commissions, fees, 87. So let's do the math. Is it going to give me 1% or more? That's all I'm looking for. I'm not looking for huge market cap. I'm not looking for the possibility of this thing jumping up to 1,000. I really don't care. I want safety, predictability, and simplicity. In less than 10 minutes a day. All right. Calculator. 179. Divided by the investment. 87. 21. Hear my voice going. 2%. Okay. So, Mr. Mark, this 5-minute trade going to give me 2% for this week. If I get 2% every single week, that's 100% per year. Simply, safely, predictably, consistent. That's what I'm looking for. I'm not looking for maybes. Okay. So if I'm buying it at 89, what the hell is it? It's at $89.10 right now. Okay. $89.10. I'm selling it for 89. That's less than what I paid for it. And I'm still walking away with 2%. Explain to me how that's not brilliant. Think about it. The stock is bottomed out a couple of weeks ago. Now it's on an upward trend. Company's over 100 years old. It's got 5 decades of consistent profitability. I'm buying it at 89. I'm selling it for 89.10. Selling for 89, which is less. I'm walking away with 2% profit for 5 days. Explain to me how that's not a good deal. Anyway. Next. Now to Target. Alan Kirkland. Not sure this live is live. Alan, what does that mean? Not sure this live is live. Okay, Alan, just for you. It is 10:09 p.m. 9th day of the 10th month, 25th year. How can I actually answer your questions and give you the time of day if this is not live? Is margin a bad thing to use? Cardac. Okay, here's the thing about margin. Margin is awesome if you understand the risk and you know how to use it. I always tell you, do not do margin until you are really good at what you are doing. Okay, means consistently being profitable. Consistently. And then you can understand the risks involved. Margin is borrowing someone else's money to trade with. So you should never ever use someone else's money to do something you don't know how to do yourself. Get good at one trade. Just one. Perfect one. Then move on to the others. There's a whole bunch of trading strategies out there. The reason I teach this one, it's simple, it's predictable, it's consistent. It was for a 9-year-old. Now my daughter was. You know what? You guys haven't seen. Some of you have. All right. Here's Dirch. Okay, the 10-minute trader has been a live website for over 15 years. All right, we're going to go to YouTube, which is one of the links. There it is right there. The links. Okay, video. Video. Oldest. There she is.
Hi, which might have an idea to do, but I do. Being part of that is weekly release of stock trading and trading.
All right, and that's me. 15 years ago. We didn't have what do you call it? Yes, dividend calendar. We had to do it on a whiteboard. That's my favorite part. I watch this video just to cheer me up. Come on. Okay, let's get back to there. So I've been doing this for a while. All right. Simple, safe, predictable, consistent. For my 9-year-old daughter, 1% per week. That's over 50% per year. If that's not enough for you, then you're definitely in the wrong place. It's slow. It's boring. It's monotonous. It's the same stocks over and over again. Companies over 50 years old and consistently gives me profits. Why not? It just makes sense to me. Peyton, how you doing today? What strategy would you suggest for someone that does not have enough money to buy 100 shares? Peyton, I would suggest capturing and then using fractional shares. Something like Robin. Simple. You get in. You buy 2.5 shares, and when the stock goes coming into the dividend play, you jump in, jump out, grab your profit to the next one. For you, Peyton, this is what we're looking at. Okay, Peyton, this is called a dividend calendar. Each one of these green dots represents a company that's going to pay a dividend. Dividend capturing is simple. You buy it before the little green dot, capture the dividend, and then you sell it for a profit after you're done. Now, a little tip. Don't buy it on the day of the dividend. Buy it a week or two before. Catch the dividend. The dividend. Get one right here. Let's get Apache, right here. 25 cents. Where the hell is it? It's the 22nd, right there. Apache, Clorox, Lowe's. Okay, if I'm going to buy Apache, I'm going to buy 6, 29. 2 weeks before this date. As soon as she jumps up 25 cents, which is what the dividend is, I will jump out and I'll move on to the next one. You have about 15 stocks here, 139 here, about 25 here, 15 here, another 20 there. Okay, every single week you have close to 100 different companies. Every single week. Find one that you like, grab that dividend, get the hell out before the EX date, because after the EX date, the stock has a tendency to go down. But Peyton, if you want to chat me your number, I'll give you a buzz, and I can talk about it. I promise you, I won't try to sell you anything. Okay, we could just chat. Get 10 minutes my time. No charge. You know, just chat. I like to help people out. All right. I'm just getting started to get you. Come up, boys. Verizon. Let's get out of here. Nope, not this week. But here's the thing. I like Verizon. I do. They've been around for a while. She's dropping. Okay, looking for a new bottom. As soon as she finds that new bottom, she's going to turn go back up again. Okay, so just keep your eye on it. What the hell was that? Just keep your eye on it. Okay, today might be the bottom. This might be it. It might be tomorrow. It might be Monday. But it is coming. Okay, do not fool yourself. It will be here when it gets here. Okay, it drops until it's done. Because you cannot tell me and have me believe you that people will not buy this at 40. They will not buy it at 30. They will not buy it at 20. At one point in time, the people are going to say, this is a good deal. I'm going to buy it. What number is that? We don't know at the moment. Because it sure ain't 40. Because it's at 40 right now. And if it drops further, it ain't going to be 39. It ain't going to be 38. It will turn around when it's ready to turn around. Stocks drop until they're done. Stocks go up until they're done. That's it. Okay, if it was more than $45, it would have kept on going up. But no, it wasn't more than $45. That's why it turned around and started to drop. All right. Thank you, Nico. Eric, AMC. Interesting. Okay. High. Where was it? Down. So it's turning around right here. $2.93, $3.08. That's more than 2%. All right. Let's take a look. Okay. High, you're low, where is it? It's down. She's going back up again. I like to the upside before I jump in on the third day. Well, the bottom was yesterday. Today's one day. I get tomorrow and then Monday before I might think of jumping in. And then I'll do the $3 options. Right now, it's at 293. The $3 option is going 8 cents. That's more than 2%. So that makes sense to me. If I like AMC, which I don't. But that's me. If you like it, you do it. Way to go, Nico. Sun SUN. Oh, Sunoco. No. Who came up with that one? October, November, December. I don't think the numbers just don't work. No. Rachel, Pfizer, PFE. No. Do you see that right there, Rachel? Okay. You're high, you're low. Where was it? She dropped. Here's the bottom. Shot up like a rock. She's pulling back. I'm going to wait till it gets down to here before I do anything. I'm going to put 2 weeks from today. It's going to take 2 weeks to get there. Next. Ooh, I wrote the wrong one down. Pfizer, PFE. Oh no.
Oh,
Cinders,
no.
I'm not
Cinders,
even
I'm
going
not
to
even
look
gonna
at the
look at the
cues.
cues.
Apparently you don't pay attention to what I ask.
Okay, when I say make sure the company's profitable.
The cues is not a company and it's not consistently profitable. Wow. A lot of these things. There we go, right there. NCR futures. Do you have a recommendation for a funded account allowed in the USA? I'm not 100% sure what you mean by that. I've been trading for about a year and want some advice on where to find solid funded accounts. Thoughts on new scale SMR. Didn't I buy some SMR recently? Huh? Here we go.
SMR. That does it. High, low. Where is it? Down. Okay. 40, 61, the 50, 40. That's 5%.
Did you see how quick that was? 5%. Okay, great. Well, let's look at it a little deeper. A year ago, 12.46 jumps up, pulls back, finds the bottom, 10.76 back in April, TDS day. From there, she shoots up from 10 bucks up to $55. Then she drops, go back up again. Okay. Do you like this company? Well, let's say the last 30 days. Okay, here's the last 30 days. The high, the low, where was it? Up, down. It's still in an upward trend. Okay, and 40.61, the 41 is going for 220. Well, let's see it. Let's actually see what it looks like. Okay, covered stock right there, the 41 right there. One contract. At the market, there we go. Here's Johnny buy one covered call. SSMR 17 October. That's next Friday. The 41 call. 249 is the profit. Wow. 249 is the profit. 38 is the investment. Interesting. You don't see that often. It's just a warning about the stock. So you might want to read that before you buy it. Anyway. So that's what it is. Here's the profit. 249. Here's the investment. 3,800. Okay. So let's check out the numbers. I'm going to show you something crazy because somebody over here asked me about margin a while ago. Clear that. So 249. Is the profit. The investment for this particular trade from one contract. 38.51. That's a grand total of 6.4%. You think that's good? You think that's good? Hold on a second. This right here is the profit. This right here is the investment. If it's all cash, and it's a 6.4% return for 1 week. Hold on a second. Look at this. This right here. Buying power effect. 1,810. That's margin requirement. So I have a margin account. So if I do this margin account, let me show you what I would get this one. Profit's still the same. 250. But on margin, my cash requirement is 1,810. All right, well, let's do that. Divide 1,810. You ready for this? Give me like 13. 13.8. That's crazy. 13.8% for 1 week. Let me explain it to you. Okay, the current price right now is 40.61. Okay. I'm selling it for 41. Okay, it's just one strikeout. It did go up 39 cents, hit 41. But I would make 13.4% for 1 week. Well, let's change it. Do they have a 40-50? Let's try this. Okay. Let's edit this. And do they have? They do. They have a 40-50 right here. All right. So we're gonna do the 40-50. All right. So if I buy it at 40.61.
I sell it 40, 50,
which is less.
Okay, I'm bringing in less money, 218, but it's only costing me 3800, and our margin is 18.
Well, let's find out what that is. 218 divided by 32. That's 5.6%. Ooh, big deal. 6.352. I take the 5.2 because it's a trade.
5.6.
5.6 for 5 days. For 1 week. Next Friday. Now, can this thing stay above 40-50?
It's at 40-60
at the moment. 40-61 at the moment. I'm buying 40-61, I'm selling it for 40-50, and I'm walking away with 5.6% for 1 week. All cash. What does margin look like? Same profit. 218. What am I paying? Me personally, 188,007.
It's 12%.
12% for 1 week to sell it. 12% for 1 week to sell less than I paid for it. That's crazy.
I'm buying it for 40-61, selling it for 40-50 with a covered call for until the 17th of October, which is next Friday.
What's the stock doing at the moment? Okay.
Here's your 30-day high. Here's your 30-day bond. She shoots up, pulls back, now she's going back up again. It's in a nice upward trend for the last 30 days.
Buying it for 40-61, selling it for 11 cents less than I paid for it, walking away with 12% return for 1 week. I'm only looking for 1%. This one's offering me 12. It's a numbers game. Then you have to ask yourself the question: Do I like this company? SMR. Am I willing to buy it? Am I willing to hold on to it? Never sell it for less than what I paid for it. Well, it's okay for what I'm doing
because I'm buying it at 40-61. I'm selling it at 50. I'm collecting this much right here.
Which is more than what I paid for it. Because you add the two together.
Okay, 40-50 is what I'm selling it for. I'm collecting 206. So in actuality, I'm selling it for 43.56.
I'm buying it for 40-61.
I'm selling it for 41.50 plus the 206 is 43.56.
You add it together. That's what I'm walking away with. That's a profit over 12%. Because I'm buying it on margin. I don't suggest anybody do margin to understand the risks involved. Borrowing someone's money to trade with never a good idea. Unless you really know what you're doing. All right. It's 10:30.
Gonna bust out my chair here
and start answering questions because we have a bunch of questions. All righty. AVGO. Tim wants to look at AVGO. I don't think I like AVGO. Is that the right one? Oh no, I do like AVGO. Okay. Here we go. What do you think? Jim. Okay, here's the high. Here's the low. Nice run from 138 to 370. 138 to 370. That's more than 150. That's almost 150%. That's a nice jump. Here's your last 30 days. Right there. What do you think, Jim?
Shoots up, pulls back, 30-day bottom. Now she's going up.
And what they offering?
345 to 345 going for 985.
345, it's almost 3%. If you like AVGO, it's always going to come to that last question. Do I like this company? Yes or no? Mick Buzzman, Campbell Soup. CPB. No, not this week. Check that out.
Looking for a new bottom.
I call that bottom fishing. Looking for a new bottom. K-Van, AT&T. Interesting. Look at this, K-Van. last 30 days.
Okay, you got 30-day top right there. Here's your 30-day bottom. 1, 2 days to the upside. Now you have a higher high and a higher low today, but kind of back. I kind of wait tomorrow on Monday to find out exactly. Is it changing position right here?
It looks pretty good. What stock went to 29? Don't know. Sorry. SMR, we looked at that one. Crypto Void Tremor, thank you. Jim, we looked at that one. PLC is poised to pop. What the hell is PLC? PLCE. Hell no. I just do stocks. I don't want to mess with options. Put calls, etc. Are you a good follow? Nope. That's an honest answer. Okay. I love dividend stocks. I do. But dividend stocks in and of themselves aren't going to give me what I'm looking for. Okay. And I like options. And I'm sorry that you don't understand options. Once you understand them, it's like, oh my God, I've missed out on this money. Because that's exactly what you do. You're missing out on a shit ton of money by not taking in what is not really new anymore. They were introduced in the 1970s. That's when options first came about. And it took quite a while before people figured out, hey, how can we play with these things to make a whole bunch of money? Just me. ORLY. Can't we do about to go up big time? ORLY. Hell no. I think he just does stocks and dividends. Nope. Okay, Harry Shaven. I do dividend stocks. Pre-qualified dividend stocks. I do weekly options against them. You'd lose a ton with Target. I understand you don't want appreciation, but you can't have a dog. I have a dog. I have a very nice dog. She's very obedient. She listens to what I say. Target has got a social issue right now. I understand they have a social issue right now. They also have five decades of consistent profitability, regardless of their social problem. ORLY has reliability and so much to go. All right, just me. You do it. I don't do monthly. Just don't pay. Okay, just me. There's 10,570 different companies. You like ORLY? Nothing wrong with that at all. I'm just saying. Nothing wrong with that at all. It just doesn't work for me. It doesn't fit what I'm looking for. That's it. It doesn't fit what I'm looking for. Lorne Curtley, thank you for that. Hugolina, SoFi, no. How much money do you work with per week? Couple million. I swear by options took me many mistakes till I figured it out how to manage risk. I'm going to agree. Jason, should I take profits when ETS up 9,000? Jason, here's my thought on that. Okay, I can't tell you what to do. I mean, I could, but I'm not going to say nothing about you, and it would be a disservice, and I don't believe in that. Okay. But here's the thing. It's not a profit until you take it. And nobody else ever went broke taking profit. This is probably the most honest dude I've ever seen on TikTok. Hey, Troz, thank you for that. I'm going to quit now. I'm going to leave now. That's the nicest compliment I got all night. I'm going to quit now. Thank you for that, Troz. Peyton, thank you. You're welcome. Come up, boys. Thank you. Dude from Iowa. You were right. I hadn't found the bottom yet. K-Van, she keeps going down till she's done. Think about it. It only makes sense. When it's done going down, when enough investors say, "Oh, that's a good buy," I'm going to jump in. Because I can almost guarantee that Verizon is on a bunch of people's list. They're watching it. And as soon as someone steps up to the plate and say, "You know what? This is the bar. I'm buying." And then she's going to turn around and go back up again. That's what they do. They go down. They go up. That's That's it. Jennifer, how are you doing, Jennifer? Levi, what's going on? Western Digital. Levi, you actually give me the ticker symbols. I've never heard of Western Digital. Okay, I've been trading for almost 30 years. Okay, I never heard of Western Digital. And there's got to be a reason why I've never heard of it. Troz, sir, I'd love to really appreciate 10 minutes of your time. Hey, Troz, tell you what, you're on TikTok, left corner. DM me your number, I'll give you a buzz. Me personally. Okay, if you get text, email, WhatsApp, Snapchat, anything like that, that ain't me. Trust me. I get 35 people pretending to be me. Okay, so you probably get an email, a text or something. Saying, I got a great deal. Send me money. I don't do that. Dude from Iowa. I also trust more than words. I believe you there too. Okay, Marshall, Silver Futures. I don't commodities anymore. Okay. Mike, AMD, Advanced Micro Devices or ARCAT. AMD, Advanced Micro Devices. Hell no. You weren't listening. ARCAT, double hell no. You really weren't listening. Dude from Iowa. I sold most my Pfizer. I'm mad at myself for building such a large position. Okay. Tyler, what about Chevron, CDX. What's happening this week? Bottom fishing. Do you see that? See that tie? Okay. Highs up there, back up. Now she's coming down for a new bottom. Just wait it out. Okay, if you like, don't get me wrong, I like Chevron too. Okay, it is on my list. So as soon as it finds a bottom, to turn around, go back up again, I will look at the numbers. But at this moment in time, I'm going to wait until next week. I'm going to write Chevron. I think I've already got Chevron written down. No, I got CDS written down. CDX. All right. James Bullock. Coca-Cola. Normally I don't buy Coca-Cola. Here's the reason why. 66.37. Okay, the 66s. The 67s are going for 43 cents. That's not 1%. I think I bought Coca-Cola twice in 30 years. Ruben. What about Blue Owl Corp? Where was it? What about Blue Owl Corp and their insane dividend yield? Okay, Ruben, you actually got to give me the ticker symbol. I've never heard of Blue Owl Corp. And if someone's giving you an insane dividend yield, it's probably bait. Okay, they're baiting you in with a dividend yield to get the money from you. Dude from Iowa, PRU. Is that Prudential? It is. And that's a hell no. Dude from Iowa, I don't do months. The numbers just don't work. I don't know how to explain it any better than that. Okay? I mean, don't get me wrong. Prudential might be a great company. But the numbers just don't work for me. I can't get weekly cash flow from a company that offers monthly options. I can't get cash flow from a company that has monthly options. Because a monthly option, you can only trade it once a month. Then I'm sitting here looking at that stupid screen all day to get weekly cash. No, I don't do monthlies. Here's a good question for you. Dude from Iowa. Do you live 1 month at a time or one week at a time? I live one day at a time. You know, the closest. They don't have. Actually, they do have daily options. They do. I just don't trade them. But monthly options, that's 30 days. It's hard to figure out where a company's going to be in 30 days. It's challenging enough to see what's going to be in 5 days. Because if I buy on Monday, I want to know where it's going to be by Friday. Because the option expires on Friday. But a monthly, you have to figure out where it's going to be in 30 days. You got to wait 30 days before you can do another one. Now it's okay for those who have busy lives. You know, if you have kids and you work 40, 50 hours a week and you're busy all the time. Well, yeah, monthlies might be great for you. For me, no, thank you. Okay, because look at it this way, dude from Iowa. If I'm getting 1 to 2% with each trade that I do, once a month, that come to 12 to 24% a year. And that might be good for you. But if I get 1 to 2% every week, that's 50 to 100% at the end of the year. So to me, it's worth 5 to 10 minutes a day. Okay, so 5 or 10 minutes a day. All right, what else we got? Ty, thank you for that. Mike, what's going on? Hugolino, we already looked at Coca-Cola. It was a no. Watt. W-A-T. What the hell is that? That's funny. What the hell is Watt? The hell is Watt? W-A-T. Waters Corporation. Hell no. Like, you don't listen. Cincinnati door. The Conquistador 435. Anything you recommend for trading tomorrow? I don't make any recommendations. Sorry. Nick. SMR has no dividend. Only been around for 5 years. Yep. I didn't say that I was doing it, did I? Someone put it up. I looked at it. What's the IPO popping after hours? Don't know. Don't care. I don't do IPOs. Isn't that simple? Don't care. How do I get out of margin? Make a phone call. And you say, hey, get me out of margin. Sun nuts. Thanks for your honesty. Hey, sun nuts. I appreciate what you're saying. But let me explain to you why I don't lie. Because I'm too damn old to remember them. It's hard enough to remember the truth. Can you imagine lying? I have to remember all the lies. No, thank you. It's easy to just, you don't like it? Hey, too bad. It is what it is. I'm terribly sorry. I grew up in a time frame. It is what it is. You don't like it? Terribly sorry. You know, water's wet, dirt is dirty, clouds are white. That's down. Common sense, they just don't teach it anymore. So if I have 100K, is all of that at risk weekly to get 1%? Okay. Elkie, is that right? Elkie, let me ask you a question. Okay. You had 100,000. Where is it? It's a simple question. Where is it? It's gotta be somewhere. Do you have it in a bank? Do you have it in a CD? Is it under your pillowcase? Is it stocks right now? Is it an IRA? Is it a 401k? It's got to be somewhere. So here's the thing. When you say, is it at risk? Let me ask another question for you. Coca-Cola has been making cola for 140 years. Do you honestly, this is a sincere question. Do you honestly think Coca-Cola is not going to be around 10, 20, 30 years from now? We don't know. The Earth could open up and swallow every single Coke machine on the planet. It could. Is it going to happen? Most likely not. There's a high probability. I would like to say at 99.9% that Coca-Cola is going to be making Coca-Cola next year. The year after. If you feel anything's at risk, pick something that's not at risk. Okay? Ford has been in business for over 100 years. General Motors over 100 years. Harley Davidson over 100 years. Bank of America over 100 years. Wells Fargo over 100 years. Procter & Gamble over 100 years. Here's a good one for you. Consolidated Edison over 200 years. They've been in business for 200 years. You think if you put your money in a company that's been around for 200 years, they're going to say, oh, it's about time this guy's money went away. Doesn't work that way. Okay, your 100 grand doesn't mean anything to companies like Coca-Cola, General Motors, IBM, AT&T, Home Depot, Lowe's. They could care less about your 100 grand. They're not going to take your money and run away. So there is risk everywhere in life. If you decide not to get out of bed, you stay in bed all day long. Well, you have a risk there. You have a risk of getting bed sores. You have a risk of a tree falling on your house. You have a risk of somebody driving. You have a risk of somebody breaking into you. There's risk everywhere. You want to know risk life? It doesn't exist. Okay, I can't help you out. Seriously, I can't. Okay, so if you're concerned where you're putting your money, remember rule number one: never ever buy something you don't want to hold on to. So if you want good companies, like AT&T, IBM, General Motors, Ford, Bank of America, Coca-Cola, Pepsi,
Wells Fargo, Procter & Gamble, Kraft Heinz. These all right, that's enough. You've got to figure out what works from you. Is it 100 stocks bought per contract? Yes. Done. Western Digital makes hard drives. Dawn, it didn't give me the ticker symbol. Okay. Without the ticker symbol, I can't look it up because I've never heard of the company. Okay. I never heard of the company. Means I'm not putting my money into it. I've been doing this for 30 years. Which means I have a good grasp of all those 10,570 companies. I only look at about 300 of them. Because only 300 of them have been consistently profitable for more than two decades. Stock market's been around for 400 years. 1602, the very first dividend stock sold. 1602, very first dividend stock sold. So it's been around for a while. It ain't going anywhere. It's going to be here long after I'm gone. WDC. Levi, what's WDC? WDC. Western Digital. Hell no. That was quick, wasn't it? Hell no. The numbers just don't look good. The Conquistador. Lapa. How are you today, Lapa? Okay, Maverick Hunter. I'm for short-term trading. Yeah. I live one day at a time, one week at a time. I'm not guaranteed tomorrow. Why would I buy something and hold on to it for years? I'm not guaranteed next year, the year after. I want to live today. What system are you using and how can I obtain it? Okay, Billy, this back here is called Think or Swim. It's through Charles Schwab. You can use it for free. Strategy Bank of America, BAC. Yep, got it. Keurig, Dr. Pepper. Okay. Sid Mansoureg. Okay, you got to give me the ticker symbol for Dr. Pepper. Strategy. At that bag, look at Bank America. We were just talking about that. Not this week, kiddo. Okay, bottom fish. Look at the last 30 days. Last 30 days. Bottom is there. Shoots up. There's your high. Now she's dropping. Perfect opportunity to keep your eye on it. Alibaba has only 2 years of dividends, which means only 2 years of profits. No. Okay, so strategy. See that? She's dropping like a rock. As soon as it finds its bottom, the company's over 100 years old. It will find a bottom and then turn around. You see that? Okay, so I just keep an eye on it. I'm going to write it down for next week because that baby's going to find a bottom soon. BAC. All right. So I got all these over here. Earnings next week. Okay. Maybe after earnings. James, any thoughts on Wynn? Ooh, Wyndham Resorts. WYNN. Interesting. Now here's an interesting one right here. The bottom was 30 days ago. Shoots up. Was that Thursday or Friday last week? Look at yesterday at the bottom. Today is one day to the upside. One day to the upside. I like 2 days to the upside. Then on the third day I'll jump in. So maybe by Monday this would be a good idea. And they're paying over 2%. Did you see that? Who came up with Wynn? James. Okay. You see this right here, James? Okay, here's the bottom right there. Shoots up, pulls up. 30-day high. Now she drops. Here's the new bottom. 1 day to the top. 123. The 124 is going for 2%. If you like Wynn Resorts. It's actually that simple. Do I like it? Do I not like it? Sidman. BJC. Maverick, what's BJC? Nope. Citigroup. Nope.
Nope. Okay.
Citigroup, same thing.
Citigroup,
Here's your bottom, here's your top, now she's pulling that, top, now she's pulling that, look at bottom.
I'm gonna put Citigroup for next week.
Citigroup.
Hey,
the residents,
what's happening?
Comcast.
Whoa,
It just missed everything.
I like it, but it has a long history.
and I don't know all about.
Okay,
not a problem.
Good evening, sir. How are you? All right,
Syed
Syed
Let's take a look at Comcast.
I get a flower.
Woo,
CMCSA. It is. It's at the bottom of the year. Syed, that's a good pull. That's a good.
Right there. Oh my God, I'm tripping over all this stuff. The bottom of the year, right there.
You can't get any lower than the bottom of the year. Okay, you've heard it over and over again.
Buy low, sell high.
Take a look. That's the low of the year. You cannot get any lower than the low of the year. Okay, so we're basically done with camera number one.
Maverick.
BHC. Interesting. I've never heard of BHC. Let's check it out.